Hello, everyone. Welcome to our second This Week in Crypto of 2023 here. It is uh, shocking and great to see that we have so much green here on our screener. It's kind of a almost foreign sight after the 2022 that we had with just red week after red week after red week. And, at best, we'd see a little bit of mixed prices up and down. But for the second straight week, we're looking at a 7-day price return screener of just nothing but green outside of obviously stable coins that are sitting around even. We're seeing almost all assets in the top 100 market cap seeing double-digit percentage returns, which is crazy to see, considering where we were just a month ago with everyone really just down on their luck and very miserable about the markets and all of the profits that were given up after the great 2020 and 2021 we had. But here we are looking at, another week where Bitcoin jumped another 13%. It's officially above 19K for the first time in 2 months, a little over 2 months. Ethereum's officially over 1,400 for the first time in 2 months. And we've got many big performers. You could see that from our thumbnail, we really highlighted Aptos, and we'll see if we have some brief time toward the end of the call to go over Aptos. And we definitely will be able to take some of your questions to talk about some specific altcoins that you have your eyes on right now. We also see Lido DAO with a huge week, Avalanche, Solana, continuously since really late December. Solana's been on an absolute tear right after, people started to write it off and say, it's a scam coin and it was never going to be that big. And, its connection with FTX is showing its true colors now. Here we are where it I believe briefly jumped over $17 when it was below $10 just about 2 weeks ago. So it's funny how much things can change in an absolute heartbeat. That's the beauty and the pain of crypto. We also see Flow having a huge week, the Central Land, Phantom, Maker, among others. You get the point. There are just so many that we can cover right now that are seeing big rebounds on their market caps that we have a limited time to really go over them. And I wanted to designate a little bit of time on this call to actually look at what makes an ideal portfolio strategy in this kind of climate where there's so much uncertainty, there's separation between one altcoin over another. Many people like to, keep a lot of their percentages in Bitcoin and Ethereum, and then have a small allocation in, seeking a huge price pump like Aptos over the past week, for example. Which if you caught it, congratulations, but it's certainly a very difficult thing to be able to have a specific altcoin on your radar that isn't really being talked about much, and then have it suddenly, 2x in market cap value. But we'll talk about that a little as the call progresses here. For now, looking at the screener here, I can definitely see that, Bitcoin and Ethereum are not really seeing any sort of special spikes in discussion rates. It's interesting, surprising to me that Ethereum is actually lower in social volume than it was a week ago, despite rebounding above $1,400 for the first time of the year and for a little over 2 months. That's a big accomplishment. So we might start to see that tick up as the weekend kicks off, assuming the price holds or even starts climbing close to $1,500. We can also see, USDC continues to get a lot of discussion. It's come a long way in the past year, putting Tether to the test a bit as far as the preferred stable coin by the masses. We can see, Shiba here has had a big social volume week. Avalanche as well, due to their big price resurgence. Social volume jumped 149%. So that's one of the most notable one I've seen over the past week here. And, The question now is, can it continue? Just like we asked last week, and things were starting to look a little inflated. However, we were pointing to this model, which anyone on Sandbase Pro can freely get and make a copy of and check in on anytime. It works pretty straightforward. You've got the red bars here that show when people are longing more than shorting on the average exchange, and the green bars indicate that people are shorting more than longing. You would prefer if the assets you're holding are actually being shorted by the masses. That might sound counterintuitive, but what that means is people are setting up futures bets, leverage longs on an asset, hoping that prices go down, when in reality, prices tend to move the opposite direction of the perpetual contract funding rates. So if you see a ton of shorts, that means that if the price starts to climb, it can get a lot of rocket fuel added to that climb based on all of the liquidations that can come from the shorts. And vice versa, you don't want to be in an asset that is seeing excessive longs typically, because that means there's an increased chance of, if the price starts to drop, it can drop extra hard because of all of those extra longs that can be liquidated and push the price further down. So really what we're looking at now is a fairly break-even top 100, 150 or so market cap set of coins here, because people don't know what to do anymore. They were actually 2 weeks ago looking to be shorting quite heavily, and I'll prove that really quick because we had an article that yours truly wrote about it. I'm going to find it really quick. I know it was right around the beginning of the year. Check this out. So yeah, this is what it looked like around January 3rd. This is just 10 days ago, guys. And it actually, I saw it even more green than this at one point, but you can see all the greens, the yellows indicating they're neutral. Really, even these reds are pretty much neutral. But like we saw Solana, for example, I think the price was around $10 at this point, and it was off the axis. There were so many people shorting it, believing that the coin cannot possibly rebound due to all of the FUD that was going on and negative news surrounding it. And sure enough, it's, I believe, not quite more than doubled, a little less than doubled, something like a 70, 80% return just in 2023 alone. So that is massive. And this is what it looked like then. This would be the ideal kind of market for you to really open some longs, add on to your positions. Nothing's a guarantee in crypto, but if you're playing probabilities, you'd much rather have the shorts, popping up all over the place like we saw 10 days ago versus what we're seeing now, which is a dead even long versus short ratio pretty much all over the place. Now, at the very least, we're not seeing a ton of longs, so there isn't any sign of traders getting greedy yet and excessively trying to leverage their trades, 5x, 10x, even 100x longs opening up left and right. This is basically just a bunch of people calming down and saying, I don't know what direction the markets are going to move anymore because I didn't expect this rebound to open up 2023. So absolutely, there could be room for things to run even more. We'll investigate more as the call progresses. But yeah, in layman's terms, we are back to neutral, really, and things can break either way according to the funding rates. So keep that in mind. And let's also look at another great sentiment metric right now. This is, for those who have watched previous weeks, a great chart for gauging how much FOMO versus how much FUD the markets are getting right now. And it is interesting to see that the blue lines here have actually been exceeded by the red lines. When you look at right here, this is about, let's see, yeah, this was 2 hours ago. You rarely see it. You can only see a few instances on this chart where the red line actually had more mentions than the blue line. The blue line is any mentions on social media that includes buy, buying, bought, bottom, bottomed, or bullish. And the red line the red lines are sell, selling, sold, top, topped, or bearish. So we got 6 positive words versus 6 negative words. Blend them all together, and you get this result showing that we're actually getting more bearish words as of 2 hours ago than bullish words. The last time that happened, and perhaps the only 2-hour interval that we saw that in the past month, was right here on New Year's Eve, where we actually saw a pretty significantly higher amount of red bars than blue bars. And that led to a pretty large increase ever since, right? We know how 2023 has gone thus far. And if you've been bearish at the start of the year and hoping prices would go down further, then you were kind of blindsided by the fact that there was this big run up. And a lot of people were bearish right as the ball was dropping on New Year's Eve. This is normal. When we see excessive amounts of negative terms, that increases the likelihood of prices rising. Alternatively, when we see an excessive amount of bullish terms, we tend to see the price drop right afterwards. Plenty of counter examples to this. Do not say that, you know, it's always going to be this way or always this way. But as I mentioned, crypto is a game of probabilities. And if you want to place your bets with an educated purpose behind it, then you're going to want to do it with the idea of betting most favorably toward markets going up when everyone else thinks it's going down, and betting things will go down when everyone else thinks it's going up. That is the way markets go. We have done many back tests and studies that prove that the crowd is typically wrong, and markets move in the direction of the least expected direction from that crowd. So I think this is a really valuable one. We can even share it. I'm going to put this in Skype right now, and Balresh, maybe you can drop it in our chat. I think it's a very important one.
Looks good. By the way, Brian, is it on the same scale? No.
Yes, they are. Yeah, I've got shared access on.
Cool,
yeah, if I take it off, you'll see that the reds really exceed.
Yeah.
But I think for the purpose of like really finding those anomalies of
can you take it for 1 year? I want to see how did we perform for the whole year of, now it's a bit more than the year of bear market.
Yeah, let's take a look.
I would assume it was flipping in 2 times.
Yeah, there were definitely a few flips. Let me give it a quick refresh. Sometimes there's a little bit of a hang in the data. A year can there it goes. Okay, so the closest time that I've seen.
This blue was so strong on the first kind of temporary bottom. Wow, not bad.
Yeah, I think this right here, right, like the last week of December, if you really kind of squint and get in there and look, I try to make it a little bigger. Yeah, like right here is really the only times over the past year that we saw negative terms exceeding the positive terms. And I think it makes sense because that's exactly when the price bottom happened. You saw a few times
when they finally realized, okay, now we're going down.
Right.
Then let's say, okay, now at last I can rebound. Yeah.
Exactly. And what you don't want to see is this, right? If you're sitting in late April hoping that prices are going to go up, everyone's talking about buying the dip there after there was a rebound in March, and then it comes down over the next 4 weeks. So everyone is very bullish right here. And the opposite happens. And we start having all of these FOMC meetings and the Fed raising interest rates, and they just got absolutely crushed. So it works both ways. I think this is a really fascinating chart that anyone can benefit from just by checking in on. But how are you doing, brother Maksim? How's everything on your end, and what are you thinking about all these crazy market moves?
Well, me personally, I'm really busy with so many things. As you know, in the product or marketing, we start new year with a lot of plans, and also personally moving from one place to another. But for the market, we've been, I think, quite on spot. At least what I've shared in our channel with ENS. I do expect one more slight top in some altcoins. Actually, Bitcoin in Ethereum possible too. I wish my analysis is right, because this is actually also the reason why we are, when we are trading, suffering so much, because it's a very uncomfortable feeling for the mind when you don't know what's going on. So at the moment, I believe I know what's going on. So the structure is kind of became clear. And according to the structure, one more top, and we'll have 5 up with very good perspectives, and then you know what to do. But it's like happened more often than not, than the market doing something, say, shit, now again, I don't know what's going on. Mm-hmm. But according to what I believe I know, one more top, correction for 1 or 2 weeks, accumulation phase, and then run for the big highs. I mean, big relatively to what we experienced in the last 3 months. Maybe around 2,500 in Ethereum. But I don't see any further, just because I don't know. It's either a result of long bear market, or from what we've been discussing in separate calls. I still think the current rally is like 3 to 6 months, mm-hmm. and we need to do an attempt to break the lows and trying to squeeze micro strategy out of the market. Right. But maybe the guys had some good karma. Maybe they will survive. Who knows? And for now, it does look like a 3 to 6 months bottom. Yeah, it looks good.
Good. And we've got to give you credit where it's due, because last week you kind of mentioned the same thing. You think there could be a pretty extended relief rally here, and at least after the first week of that prediction, it's continued to come true.
But at the moment we just saw on some altcoins MVRV 30 days reaching to 30%, which is historically for us always saying, okay, we're getting there to the top for some altcoins. I think it was Lido at least. And ENS, I see the structure is ripening. The third wave is probably finished, so will be, if we have 5, so some consolidation and spike to 5, and then a few weeks chill out. And the only Ethereum and Bitcoin, they're growing so strongly. I mean, that's kind of too strong side. So we need to give a market time to show its power. It just exploding. Yeah? Every day you think, okay, it cannot, it can. So for Bitcoin and Ethereum, I still look for more clean structure. One counter does show that we actually maybe even finish in the 5th, but I'm waiting. So for Bitcoin and Ethereum, no calls. For altcoins, quite some already reached. Be careful if you're with altcoins. And we might see also anyway rotation from altcoins to Bitcoin, Ethereum. Fear in the market still here. Fear market is not gone. I mean, I myself. Now, when I'm talking, I notice that I'm expecting something not so good happening. And I think me already balanced and quite relaxed guy. Some others who had suffered more, they might be really not out of the woods yet. Mm-hmm.
Yeah, I agree with you. I think, when it comes to putting a portfolio together right now and hedging your risk, this is a much more justifiable time to begin to be cautious and at least put some of your money more in Bitcoin and Ethereum if you've been heavily in altcoins and riding up these waves. And you can see from this model here, a lot of assets here, of the 30 or so that are being shown, are now showing semi-overbought or overbought, because the average trading returns of so many here so far in 2023 have been extremely high, almost unprecedentedly so. And, when that's the case, you can look at something a little more like Bitcoin and Ethereum, which even then they're semi-overbought, but you want to avoid some of the red bars. And there are plenty more that aren't being shown on this chart. And if you do that, and you kind of hedging your bet with, consistently 10, 20% going toward more of the home run plays, but the main foundation of your portfolio being more in those at least relatively less volatile assets, you're likely going to come out okay, regardless of what direction the prices go next. So yeah, we put an article out about 4 days ago, just talking about some of the returns then, and it's really continued now. We put out this poll as well, which some of you may have caught if you follow us on Twitter. This was 1 week ago today. We asked, has altcoin season begun? And about 2/3 of you wrote that they are going to pull back or fall back significantly. And obviously the opposite came true. And if we asked this question today, which I may do, or maybe we'll wait 1 more week, I would fathom that the answers are going to be a lot more different. I think there's going to be a lot more people saying it's time to open the floodgates, or at least prices will flatten out. But we definitely won't have 2/3 of people saying they're about to pull back or plummet. And that's kind of the fluctuations of crypto in a nutshell. You see that a lot of people are bearish like this and don't believe in markets anymore, and suddenly they absolutely surge. And you see a lot of people in October, November of 2021 saying crypto is never going to cool down. It's going, Bitcoin's going straight to 100K and beyond. And then we see a top and everything plummets. So definitely pay attention to altcoins right now, because I mentioned on a call that I recorded yesterday, typically in real, genuine, long-term bull runs, you will see Bitcoin kind of lead the way and have a big pump itself, and then its profits will start to distribute into the large cap altcoins. Those large cap altcoin profits then go to the mid, and then the mid goes to the low cap altcoins. And we kind of haven't seen that. It's been a bit opposite, where Bitcoin's taken a huge loss over the past year. Altcoins took an even bigger loss, and now altcoins are pumping while Bitcoin is barely pumping. I shouldn't say barely, it's up around 13% on the year, but you'd usually see Bitcoin lead the way when it comes to a substantial rebound. And we haven't seen that yet. It's been kind of altcoins leading the way, with Bitcoin just doing enough to let altcoins begin to rebound and move in their own directions. All right, with that out of the way, let's look at some of the key metrics here that's going on with the whales. It's always very important that we check in and see exactly what the key stakeholders in crypto are doing, especially this line right here, which represents the whales and sharks that hold anywhere between 10 to 10,000 Bitcoin in their wallets. Collectively, this line makes up about 2/3 of the supply, but it's definitely the most important chunk of Bitcoin supply, because when they move up, markets tend to move up, and when they move down, markets tend to move down. And we had seen, I'll even zoom it out to, we'll go 2 years back, not all time. So check out this green line here over the past 2 years. You can clearly see, let me zoom out, there we go. Clearly see that they were kind of staying flat throughout the beginning of 2021. This was about a year after Black Thursday, when COVID first hit the mainstream. We saw a decline beginning right before the then all-time high in April. And then after the big drop, they started to accumulate, and they accumulated pretty big. And look how price eventually followed. They were about a week behind. And then they dumped about a week or two before the top hit. And then after the top hit, they start accumulating again right here. And then this was the big true all-time high that occurred in October, and then a final leg up in November. But they were already taking profit right after this October all-time high, which would have signaled that it might be time to get out of your portfolios, or at least take a pretty significant cut out into fiat or stable coins. And really, since that time, it's been just a massive decline all the way up until near the end of November. And then we started to see a bit of a turnaround. It isn't a massive turnaround by any means, but seeing that the powers that be, the people that hold the most crucial portions of Bitcoin supply are starting to move up again and accumulate, that is undoubtedly a good sign for the future. It just needs a lot more to make up for all of the ground that it's lost over the previous 2 years, because this same group 2 years ago was holding about 72%, now at about 67%. That nearly 5% drop is, billions of dollars. So in the meantime, we can also see that we've highlighted the 4 largest stable coins in crypto. And beginning with Tether, we're starting to see some good signs here as well. Obviously, it's been a huge plummet for Tether over the last couple of years between the sharks and whales, which we've designated anywhere between $100,000 to $10 million. But they have started to add to their buying power ever since early August. So we're looking at about 5 months now where the Tether supply is starting to return to those key stakeholders who now hold about 1/3 of the supply when they actually got down to about 27.7%. So that's a good sign. But look at this orange line here. We saw a huge accumulation from the BUSD sharks and whales. Now, mind you, this is the BUSD that is on the ERC20 blockchain and is not including the BNB chain. There's a little bit of inconsistency on the BNB chain for now, but as that data becomes more clear over time, we'll start including that instead of the Ethereum chain. Either way, though, this is definitely incredible to see that they were holding about 2.4% about 2 months ago, and now they're holding 6.8%. So we're talking about almost triple the amount of supply that they're holding now versus 2 months ago, and that has to be considered a pretty good sign that the stable coins for that are native to Binance are being bought up and held at an increasing level by $100,000 to $10 million holders. And then we've got DAI and USDC here that are doing pretty similar things. They've been accumulating since August, early August, and DAI especially has really, really flourished with its line being at 28% at its bottom and now up to 38%. So an extra 10% of the overall supply of DAI is now sitting in $100,000 to $10 million addresses. That is absolutely significant. And you can really go back to the beginning of the year here, right around Valentine's Day. Been about 11 months since it hit its true bottom over the past 2 years. DAI holders have more than doubled, and USDC holders are close to double. They went from 22% held to 38% held. So yeah, we continue to see some positive signs from the key stakeholders. A few of them declined a bit over the past week. Tether has gone up, Bitcoin has gone up. So kind of a mixed bag, but the overall, past 3 to 6 months has shown a lot of positive signs, especially in terms of buying power, with more and more stable coins going into the hands of people who can pump prices in an instant. For those wondering about Ethereum in particular, we look at sharks and whales holding anywhere between 100 to 1 million Ethereum, a really wide range. So we can look at about 2/3 of the supply once again. And they were on a pretty nice accumulation run here for about a month. But since mid-December, they've actually started to tail off again. Not a big tail off. They're still up since, the FTX implosion when they were at their bottom. But not a lot of movement here from those large key stakeholders in Ethereum. It's also worth noting that the social dominance for Bitcoin is still hovering below what we consider that health line, which is about 20% of all discussions in crypto. If it's below 20%, that usually means there's a bit too much fixation on altcoins, and there could be a lot of volatility and uncertainty in the markets while things are low. You can see that for the majority of the past, I guess we could say 15 months or so now, it's been below this line. And as it's been below this line, we've seen mostly price declines. We did see a few moments where the social dominance for Bitcoin was very healthy, and that's when we would see the surge. especially right here. Look at how going into the all-time high months of October and November of 2021, there were lots and lots of discussions related to Bitcoin. And that is what we want to see, instead of, you know, a lot of fixation on these pump and dump coins that maybe don't have as much justification for having their market caps pumped the way they do sometimes. Bitcoin is kind of the home base, right? And if we see that plenty of people are investing in Bitcoin, that means that those profits can then trickle into other altcoins from there. And that's the natural progression that we want to see. So right now, continued low social dominance, which is still a negative. It's something that we have to be concerned about and may limit the possibility of a bull run until we start seeing, you know, the return of focus back into Bitcoin from the crowd. We already touched on funding rates. It's still pretty much break even after we saw a lot of shorts in December, especially if we looked at altcoins. You would see a ton of shorts going on in late December and the first week of January, and then everything neutralized out over the past week. All right, so with that said, let's look at some of the main metrics for Bitcoin going on right now. Let's start here with volume and take a look at what's going on. We did see just in the last couple days, I'll zoom in here a little so it's a little easier to see. Just in the last couple days, we did see an increase in trading volume. This bar here from the 12th was the highest volume we've seen since November 21st. So nearly a 2-month high there. And it really meant that people were supporting this climb and jumping back in, and a lot of FOMO was happening as prices surged back above 19K for the first time in 2 months. That's actually a good sign when it comes to volume. You want to see that volume is increasing going into a big direction movement. So if prices are moving way down and you see a lot of volume like here, that means that prices can continue going down until the interest level of all that trading begins to dry up, which it finally did in late November. Now that prices are moving up, you can see that interest is rising in that direction, and that increases the chance of prices continuing, which many of you TA traders know. And then as for transaction volume and transaction volume USD, they do continue to stay low. So even though trading volume is high, the actual transaction volume is relatively dormant and sticking at around 1-year lows right now. And then on a related note to the amount of overall network action that is happening on Bitcoin, we're seeing a major increase in daily active addresses. In fact, this bar here from January 10th, that was Tuesday, this was the largest daily active address spike in at least the last 6 months. I believe it was just second to this one in May. So Tuesday was the second largest daily active address day in the past year, with only May 5th beating it out. That is great to see as well. A lot of people are paying attention as prices are rising right now and moving tokens around accordingly. That's what we want to see. We want to see an increase in utility from any asset that we want to see justification for continuing to rise. However, on the other end, circulation is still very low. The amount of unique Bitcoin being moved is pretty much at 1-year low levels right now, and that has to be considered a concern. And we have a model that shows that based on the math between how much circulation is happening and what the current market cap of Bitcoin is, we are not seeing enough circulation to justify that there could be a price breakout. There could be exceptions and anomalies. They've happened before, but based on probability, having a 6th straight month of red here has to be considered a concern. And if you look at previous red stretches, we saw downward movement when that happened, downward movement. This one was more choppy up and down movement, but more down than up until things got green here. And then we had the big anomaly where even though there was a ton of circulation, prices moved down anyways. But with red, I've seen it be pretty consistent where prices have a tough time moving up until circulation gets better. All right. MVRV, we talked about it a little already in terms of altcoins and what it's doing, but let's take a closer look at Bitcoin's MVRV and how it's been shaping up in terms of average trading returns for the shorter term traders as well as the longer term traders. This red line here is the 30-day returns, which is now showing that the average active traders over the past 30 days is in double digits in terms of positive percentage returns. 10.4% average returns over the past 30 days for the average trader. That is the highest it's been since July 18th. Typically, when you see these high MVRVs on the 30-day, it indicates that there could be a bit of a cool down coming. It doesn't always mean that prices are going to drop, but it does typically mean it's going to flatten out for a bit or drop, one or the other. So in terms of shorter term trades, if you are interested in trying to time the markets, this increases the likelihood of prices moving down to make up for all of the gains that have been happening on the network right now. But on the other hand, if you look at the long term, the average trading returns of active traders over the past year are still down about 21%, meaning there is still some meat on the bone for prices to rise and pull this line back up to 0%. Doesn't mean it'll happen right away. There might be a bit more choppiness going on or even a decline in the short term before, the long-term returns begin to even out. But we have kind of a continued pattern of short-term traders being a little in profit now, but long-term traders still being short. So you can still justify it either way. And to me, this is kind of a net neutral result here on MVRV for Bitcoin. And many altcoins look the same, by the way. Extreme altcoins, you can see like average trading returns on the 30-day scale of like plus 30%, but their yearly MVRVs are still drastically in the negatives. So it kind of, there's a lot of extremes going on right now, and that's why picking and choosing your altcoins, if you are trading altcoins, can be so crucial based on what the metrics are showing. Whale transaction count is another big one. We can see that the amount of overall whale activity has been declining. The $100,000 or more bars here are continuing to move down throughout the past year for red, and even more so for the 1 million coins or more, or $1 million transactions on a daily basis, where we see that, the line's definitely been moving down here. That isn't necessarily the worst thing in the world. It does mean that there's going to be a limitation on how much prices can move in either direction until we start seeing spikes like this, and they're starting to engage, which they typically do when there's an extreme movement in one direction. But this up movement to above 19K for the first time in 2 months hasn't been an extreme enough move for whales to get super excited just yet and jump back in and start trading, either accumulating aggressively or dropping aggressively. Neither of those are really occurring right now. In terms of the amount of addresses, we do see that the 10 to 100 line has moved up significantly in the last couple of months, as has the 100 to 1,000 line. However, the 1,000, 10,000 line, after dropping throughout November, it's been pretty much break even since December. But it's at least good that these, this shark line for the represented by brown and the smaller whales represented by red, they've really jumped up significantly in the last 2 months. And at least the 1,000 to 10,000 is kind of holding steady and not dropping. So if we see something like this, like the yellow line dropping and red line rising, that really just means that the big whales are moving into smaller addresses, and the red one is increasing because the yellow one is decreasing. But if the biggest whales are kind of staying even and the others are going up, that means these are coming organically and not just as a result of the large whales shrinking. That makes sense. So the red line here, I believe it just passed its 1-year high now. Once again, after doing so in late December, we're now seeing 14,000, I can get the pixel right, 14,128 addresses holding 100 to 1,000. Going back, let's see how far back we can go here. So we have to go back to about, yeah, right around Black Thursday, March of 2020, the last time we saw that many addresses. And then all of those started dumping, but the 1,000 to 10,000 was going up massively. So that was sort of what helped cause that initial pump right after Black Thursday started. Let's see if there's anything else I can cover. Oh, I'll jump back to this in just a moment. I want to touch on this for both Bitcoin and Ethereum. I will say for the dormant coin movement, that still hasn't moved. We're continuing to see coins that have been sitting in addresses for a long time continue to sit in those addresses without being moved, typically to propel a bull run into starting. It starts with a lot of big dormant coin movement and older investments starting to be moved from one address to another. And that has not occurred yet. So we can't be overly excited about a huge pump coming up until we start to see this line at least taper off or start to decline just a little bit. And then network realized profit loss, I think it's a good sign that we're not really seeing any huge positive spikes like we saw here in February and March of last year. These are typically indicative of big tops because there's a lot of realized profit happening. And then when there's a lot of realized loss happening, that's more likely of a bottom occurring. So the realized losses have started to dry up a little bit, but we're also at least not getting into these big spikes, meaning there can still be room to run, and Bitcoin can take a crack at 20K absolutely without a lot of realized profits happening on its network. And then supply on exchanges is continuing to stay very low, sitting at about 6.7%. That's great to see as well because this implies that there's a limitation to the amount of future massive sell-offs that can happen on a network, on an exchange, because there's simply less coins to sell off on an exchange. And then finally, weighted sentiment is interesting to look at as well. It's already on 7 days. So yeah, there's a bit of a positive spike right now. This is the most positive the crowd has at least shown on social media since July. Now, in terms of them putting their money where their mouth is, funding rates are about dead even. So people may be talking about Bitcoin a little more positively, mentioning the fact that it could break 20K now, but the leveraged longs and things that might indicate that people are truly betting on that really hasn't occurred yet. And yeah, that's about it. Let me go over to the ratio of profit to loss as promised. So we can look at, I want both Bitcoin and Ethereum. Here we go. So check this out. Let's just do the last 6 months. Do the last year. Yeah, that's fine. So due to the big rise in all of crypto markets over the past week, we're seeing the largest ratio of daily on-chain transaction volume and profit to loss on the Bitcoin network for, I think, the last 2 years right now. And that's a bit scary for you short-term swing traders. The last time we saw a spike that big was the last week of 2020, right before there was a pretty sizable drop-off. It doesn't necessarily guarantee we're going to see that same kind of drop-off, but in a vacuum, when you see a huge profit spike, meaning there's a huge ratio of transactions happening when that address was in profit with the Bitcoin that they're moving, it typically means that there can be profit taking leading to a bit of a down push on price action. And not just for Bitcoin, we see this magenta line here for Ethereum also showing that it's at its highest profit to loss ratio since the all-time high, right before the all-time high, the last week of October. And obviously 2 weeks after that is when we saw the big drop off. So it kind of works similar to funding rates and MVRV and even weighted sentiment, where you don't want to see the bars high, you'd rather see them low. So on a week-to-week basis, this would be considered a bearish signal in terms of the amount of profits that are happening. And in a zero-sum game like crypto, we need to see the counterbalance to all of those profits occur in order for markets to be able to cool off and allow an equal amount of winners and losers over time. But that's about it in terms of Bitcoin's main metrics. Maxim, I know I covered a lot there, but do you have some points you'd like to bring up about kind of the top caps going on, especially Bitcoin and Ethereum, or even stable coins?
Actually, unexpected metric, if you can go to Ethereum, stay on this timeline. Is it 1 year or how long is it?
Yeah, this was the past 3 years. So I'll go to 1 year here.
No, keep it 3 years and then check
Sure.
as simple as network activity. You can take the elective addresses. And then, yeah.
I'll do, actually daily is fine.
You can do it daily, yeah. So what you see here, and I like it, it's a kind of shows a period of time, and I remember it from 1790s, that's why I'm mentioning. The price of a network keeps going down, but the network activity stable and stay on the same level. I remember back then, I came to a conclusion that, yeah, somewhere, yeah, actually even increasing. But you can say that alone on this chart, so simple analysis. Is it Bitcoin or it's Bitcoin? Take Ethereum.
Yep. Okay.
Because I have mostly exposure to Ethereum. Yeah, it's not decreasing much. We had some smaller spikes, but it stays on the level, which is approximately from yeah, 2000. When I'm looking at this chart, I don't know what it tells you, but it tells me that 2000, it's a level, the moment we correcting, which we're doing now, which we are getting relatively fast. Anything below, it's a kind of like oversold. I was thinking maybe we can even try to use here daily circulation. Maybe daily circulation. Yeah, let's try to use daily circulation and then transaction fees. It's ad hoc analysis. Actually, I did not pay attention to long term yet on this tool, but there should be something. Yeah, 1 day.
So this is Bitcoin's. Oh, I put that. I'll put 1 day on. There we go.
And I actually maybe can even do it on Bitcoin. What do we see?
This is Bitcoin, yeah.
Yeah, and then how does it look on Ethereum? Yeah. So it's interesting to see how it dropped and stayed relatively low compared to before during the last run in 21. So it was expectation for new highs happen, so no need to do. And now we're activating, similar to what was activation before that last bull run. And then close to the last bottom, it was kind of low, probably telling us the story, okay, I better do nothing. So the next period should be again increased circulation when the people see a need for it. And for some, it will be okay, I want to go and exit. It's a good price. And I think we should pay attention to it, yeah? We should pay attention. Once it's spiking, we might see sign of established trend.
Absolutely. And this is the NVT that shows how the circulation looks compared to market cap. And we're seeing that it's kind of had some weird alternate months the past 6 months. Bearish, bullish, bearish, bullish, and then bearish these past 2 months.
Yeah, so, we should actually, I think now myself when I'm thinking about the moment we see extreme network activity or like spike in network activity, it's often as a sign of trigger point or recognition of a trend. It's not the end of the trend. It's somewhere around the middle. We haven't seen it yet. So it's a good confirmation. It's good to see. For those who are bullish, as long as you don't see an increase of circulation at least double from what we have now, means most of market participants are not actively doing something.
Agreed.
Yeah. Anyway, just these two things. It's good to compare long-term 3 months, and you will see the similar patterns. A massive growth, and then a kind of start of deviation, small correction, and then the final tops happening on a low activity. People are expecting something to happen, and they have already full pockets or bags. Later it will become bags. Yeah, except other than this, not much.
Gotcha. Yeah, I think that we definitely need to see a rise in utility, as Maxim said. There's still a distinct lack of circulation on both Bitcoin and Ethereum. It is nice to see the daily active addresses for Bitcoin starting to move up. That is a good sign for all of crypto. Ethereum is still slacking a bit in terms of its own active addresses, but a lot is going to depend on Bitcoin. And if it starts to climb toward 20K or even beyond 20K, I wouldn't be surprised to see that other altcoins circulation and daily active addresses start to pick up naturally from there. But yeah, why don't we start looking at a few questions? I'm just loading up some whale transactions here to see what kinds of assets are starting to see an increase in their massive transaction amounts right now. But while we do that, let's see what people want to have us look more into so we can help out. Mr. Balresh, are you seeing anything? Hope we didn't lose him.
We lost him. Okay, let me check. Did we have any questions? Danny wanted to share with us, but he says that he's on mobile, so he will share some chat layout on Discord, showing something about patterns he found on active withdrawals. It might be interesting. Yeah.
Active withdrawals. That's one we haven't looked at for a while.
Yeah,
I see a good question here. What needs to happen to say, okay, now it's a bull market? Just interested. I've got a few answers to that, and I'm sure Maxim does as well. I think one of the primary things would be the mean dollar invested age line. This line here, starting to move down would be a fantastic sign. If we go back to like the last, let's say 8 years, we can clearly see that when the mean dollar invested age line was moving up, prices did not move a whole lot. When it starts to move down, if you just look at the box right above where I'm moving this line, you can see going from 449 up to 677 just during that short stretch. And then here, starting right at the top of the mean dollar invested age line, we see $630 Bitcoin. And yeah, it went over 1,000. Now it's over 2,500. Now it's over 5. Now it's over 16. you get the point. As the mean dollar invested age line goes down, prices tend to move up because so much dormant tokens are moving from one address to another and vice versa. And the average age in which coins are sitting in one address continues to go down as a result of all of these coins going quickly from one address to another. And that is what makes a healthy market and allows prices to really prosper. It's not a guarantee. You know, we see one mini exception here where the mean dollar invested age did go down, and it caused a nice surge here, but it went down a little further, even though the top had already occurred. But you get the idea. If you get right in at the top, at the beginning of the slope down, you're generally going to do pretty well for at least a good stretch of that downward slope. And then you can see the big slope that started in October 2020, about a little over 2 years ago. And obviously from the tip of that to, I mean, the all-time high right here, Bitcoin went up 415% or so. And it really, even after the April one, it was already starting to move up a little bit. And it's been moving up ever since. Mean dollar invested age is currently at its highest point ever in its existence. And that will change at some point, and we'll see another downward slope, but we're not there yet. I'm curious to hear what you have to say about, you know, a key signal saying this is now officially a bull market, Maxim.
Yeah, same. For those who for safe or prefer to wait for this one. It will mean dollar invested age. Of course, you will be missing initial part, but this is the point. If you are looking for safe entries, when it's going down, it means the new redistribution process started. You are not late. You will not be late. So if you're playing safe, this is the one. I always, if anyone asks me, tell me one metric, then it will be. Otherwise, all other analyses is cool, but they demand a kind of a bit more complex. You need to build a context, understand stuff, and you need to observe for what's going on now compared to what was before. And then it will end up very fast, not one. Then you better do 10. And stable coins, accumulation, are they accumulating or not? And network activity, is growing, stagnating? Are you seeing any spikes and or age consumed? Yeah. So the results are very simple, straightforward analysis, mean coin age and mean dollar invested age. You will miss the beginning, yeah, but you will have quite safe entry. All others, what we're discussing, they're more complex, but they're more precise. Yeah, you can catch up early, or you can enter quite on time. So.
Yeah, and another good signal of a bull run beginning would be, you know, a huge increase in coins from the 10,000 tier of Bitcoin addresses.
True. Especially if you see it across the board. Let's say in ERC20s, we have in the top 100. You should see it like, you know, on a Uniswap, on a Chainlink, and of course Ethereum, and even i5. i5 will be quite heavy accumulations. Yeah.
Right.
Maxi, do you want to ask something? I heard your voice.
Oh yeah, I just wanted to note that first, I'm sorry I missed the physical mute on my microphone. We now have some altcoin suggestions, if you're ready for them.
Yeah, give me the first one, and then I'll make a final point, and then check out that altcoin.
I'll let you take your pick from Cardano, Chainlink, or Uniswap.
All right, we've done Cardano, I think, like 4 of the past 5 weeks, so we'll skip that one. Link we've done a couple times. Uniswap we haven't done in a while, so I think that could be an interesting one to check out. And then we'll do Chainlink after, and maybe Cardano if there is time. But as far as whale transactions, I wanted to make this point off of what Maxim just said. If you want a way to quickly gauge whether a lot of whale accumulations are happening at once, that's what these stars designate. The yellow stars are the 1-day change, blue is 7-day change, and the purple is 90-day change. If you especially see that a lot of purple stars here are up high above the 0 line, or especially above like this 0.5 line, that's a great sign that accumulation is starting all over the place, because these are designated as like the $100,000 addresses up to $10 million addresses, those key addresses that aren't quite all on exchanges. They're actual personal addresses or founder addresses that people have for their altcoins. If they're suddenly moving up, it usually means there's some insiders that know a thing or two about where prices are going to move next. And we're kind of seeing that a little right now. It's not universally a bunch of purple stars that are in the positive range, but it's what looks like about half of them are in the 50% range or above right now, meaning they're in the 3-month scale of their lowest held to highest held. Many are very close to their highest held right now over the past 3 months. That's what the purple stars mean. And with that said, it's not surprising to see that there have been so many pumps. These gray bars here indicate the 7-day price change, and you can see how universally positive they all are right now. So like, for example, Hex, interestingly, depending on your opinion on it, there's a ton of large addresses that are accumulating more and more right now. Dent is one of them up there. Cardano is one up. Binance USD, AMP, XRP network, just to name a few. Meanwhile, something like Bitcoin, Bitcoin right here is still very low in its 3-month range. Basic attention token, Golem, Keep network, etc. But yeah, if you start to see the Bitcoin purple address look a little more positive with all these altcoins way up high, that would be a great sign. And there's also a ton that are seeing massive whale transactions overall right now as a result of so much of this upward price movement. But we'll get into that maybe at a later day. For now, we'll take the user's request and take a look at what's happening with Uniswap right now. All right, so here's the last year of Uniswap, beginning with trading volume and transaction volume. Trading volume is staying relatively low. We had the big chunks here, and the big trading volume spikes usually have been occurring at tops. So we want to be weary if we see another big chunk happening while it's on a rise. Right now, though, there isn't much trading volume, high movement going on. Transaction volume is also staying very low right now. So not much notable happening there. Daily active addresses have actually continued to go lower. Over the past 2 months, it's kind of gone like that, and circulation is looking pretty similar. So utility is not quite there for Uniswap to justify a huge raise, but it's not impossible. This certainly is not the end-all be-all in terms of metrics leading where prices go next. MVRV 30-day trading returns are at about 11.5%. So there is an increased chance of prices moving down based on the fact that typically
not
anything
yet. Should be 30. I always say it's wait. What was back in August? What was the value?
In late July, this top here was plus 35%.
Yeah, this is too much, but on the left, on the right of it, yeah. So this is okay, one-time spike. No. I mean a few plus minus few days, yeah.
So this was about 26%.
So before we get to 25, 26, I wouldn't think about much. It's nothing. Of course, it can go down, but it's you should be worrying once it crosses 25 and goes to 30. It's already worrying sign, yeah. Mm-hmm. Before that, it's nothing bad.
And then you can see that the 365-day MVRV is still in the negative, but it's come a long way. It was actually off the axis back here in May and June, and now it's at negative 11%. So we're almost back to break even there.
Yeah.
As far as funding rate goes, nothing too special happening. There are occasional shorts going on, but overall it's pretty flat, just like most altcoins are right now.
Yeah, I'm more interested in behavior of those who have the 100,000 and above, because Uniswap, it was a kind of a long time found safe bet. I mean, quite a few funds. You don't have much choice if you want to look for quality.
So 100,000 or above?
No, $100,000. How much is it?
Whale transactions.
What is it? No, not transactions. I mean, what is the price there?
Oh, I see what you're saying.
$5-6?
Yeah, so right now it is sitting at $5, about $6.11.
Okay, so let's combine everything before 1,000 Uniswap. Just combine together. Merge. Everything before 1,000 Uniswap. Yeah.
Okay, so this is 0 to 1,000.
Yeah. Oh, so they're buying it. Then 1,000 to 10,000?
Just by itself, 1,000 to 10,000?
Yeah, by itself, just by itself, yeah. Aha, so it's interesting. And then above. Then, okay, 10 to 100,000. Mm-hmm. So, and now put a price here. They seem to be having... Okay. So starting from some point of time, we've starting to see accumulation. Okay. The big boys, they're really big. Yeah, they're really big. 10,000 coins and above. Or if even it's not really big, it was $50,000. Okay, but quite big. They didn't do much till recent. And then they start burning into the weakness. Okay, no, it looks good. I mean, you can see that most. I would prefer, of course, not to see retails accumulating, but I don't know how to treat it. That they're also quite actively increasing. Yeah, and how if 100,000 and above, what are they doing? If even we're running the risk to have maybe some exchange wallets.
So all of the $100,000 or above, it does look like there is a decline, but they hold 95% of the supply, which is probably...
Yeah, because the last one is their own project or treasury wallet.
Yeah.
Mm-hmm.
It's interesting. There was a big drop off right here, right before prices dropped. But that, I mean, all of altcoins really dropped here. This was right at the FTX collapse. But I think it's a good sign, especially this yellow line, 10,000 to 100,000 Uniswap, continuing to move up just consistently.
Yeah. So they use the chance of Uniswap FTX collapse. Okay, we had the blood on the street time to increase our position. Yeah. You can follow always this group who is, I mean, not always, but this is most of the case. Good signal once having 50 or 100,000 more, they start accumulating. They will be a bit early, but you can join them. Yeah, so far so good. By the way, how do we see it in new addresses? I wonder if we keep getting how many of new users were getting there.
So network growth, let's put it on this top chart here. Here's the network growth over the past year. Not a lot. Yeah, we had this one big spike in late November.
Can you increase to let's say last month? I want to see if we see, it looks like we see divergence. Yeah, that's what I mean. The spike was likely middle of point of recognition, and now with the new top, we see less people adding, and I bet we will see it on many coins. So we're kind of building the top. Yeah. So get ready for correction. I don't know if it will happen over weekend or next week, but If you have not bought yet, you can wait. Of course, no investment advice, but yeah. How long time is it now?
This is still 1 month. I was just checking out Ethereum while we're on network growth, and it looks to be pretty flat right now.
Yeah. Ethereum is difficult because of so many utility for that token. It's really difficult to see.
Yeah, I just know that so many ERC20s kind of live or die based on Ethereum and whether it's holding, just like Ethereum lives or dies based on Bitcoin. So, yeah, very interesting, especially with the $100,000 or more addresses for Uniswap. I think that was a great asset to check out there. And maybe we'll do one more quick one, Chainlink, and then call it
just to sum up here. If you have on your chart, there's a few groups, especially those wealthy ones who've been accumulating and network address. So you see divergence. Now, the next thing I would expect to happen at some point of time, maybe even over the weekend, that we will see those who've been buying, they will sell a bit. So the moment you see decrease of the whole price going down, this is where you could consider re-entrance. Yeah? I would usually wait 2 days after we see price down and quite big holders going down. They will press the market just because of their holding, and market is still kind of shaky. But after it's over, yeah, we might see, especially if we see coin age, it means those who were holding for a long time, they fear that, okay, this might be the last chance to enter at relatively good price, then you might go relatively safely into it because there is some fear in the market and some sell pressure is gone. Otherwise, do your own risk, but I would wait till these big holders dump a little bit.
Gotcha. Yeah, I would agree with that. If you're playing probabilities, you want to be waiting for the ideal time when those big holders are pumping themselves, and then you can jump onto the ride, as they say. So here's Chainlink. It looks like Chainlink is pretty even on a day-to-day basis for network growth right now. Zoom out to the last 6 months. Yeah, so we have had this decline. I mean, this was a pretty big anomaly here after the FTX collapse. But as things stabled out, we had a little bit of movement here in December as prices continued to go down. Chainlink has been definitely underperforming compared to most altcoins so far in 2023. So that's something to keep an eye on. But it has at least rebounded like most other assets, sitting at $6.33. Typically, if we look at the 30-day moving average, the average amount of new addresses popping up on the network is anywhere between 1,100 to about 13, maybe 1,400 right now. And so far today, we're at about 500 with plenty of the day still to come. Daily active addresses, let me get rid of this line here. We're seeing, yeah, it's pretty low at the moment. Not a ton of unique addresses interacting on the network compared to the usual day. Circulation is also staying pretty low. Certainly not bad. It's a little better than it was in September and October, but utility isn't showing anything special on the Chainlink network right now. MVRV is indicating that we are above water for the 30-day traders, but not significantly at all. If you talk about the plus 15% or more danger zone that Maksim pointed out, we're not anywhere close to that right now. Or if you want to count it as 25%, we're definitely not close to that either. The 365-day returns are close to even right now, a little closer to even than most. So the average Chainlink year-long trader is just below average right now. So this is pretty much, neutral as far as average trading returns go. It can go either way. Funding rate has been neutral. Whale transactions are staying low as well. Not too much happening there. Now let's take a look at some of the key tiers. Chainlink is currently priced right around the same as Uniswap, a little over $6. So with that said, we can look at the exact same tiers that we just looked at. So the 1,000, 10,000, these are kind of the these small sharks, they are staying high. We had a big drop off here in early December, but it's since been recovering. It's interesting. You can see how both the red and yellow lines, the yellow being the 10,000 to 100,000 addresses, they both dumped significantly here right at the second week of December, and prices kind of dropped right as that was happening. Yellow line has started accumulating pretty much a month ago, but you know, maybe not much to say because they've dropped back off since the new year started. And then we have the mini addresses. This is interesting. They were on a huge accumulation run, but then dumped pretty big about 3, almost 4 weeks ago. That is atypical for really small addresses. So I'm curious what happened there. And then these are the really large ones, 100,000 link or more. They've been flat. They hold about 84% of the supply right now. Their big accumulation actually occurred as prices were dumping, and nothing's really recovered since. So this doesn't really give a ton of information to it. We could potentially break it down and look at like 100K to 1 million by itself. That's going down. 1 million to 10 million has been going up. So these are definitely active whales here, and they have been accumulating since last month or so. So I'd consider this a positive sign, but pretty big dump that they had from mid-November all the way to mid-December. So there's still a long way to go to get back to where they were holding. On-chain transaction volume and profit to loss, nothing too crazy. We had a big spike here, and that was kind of where the local top occurred, and the prices just jumped up mostly because all altcoins have been jumping up since. But we'd like to see that the bars stay low like this. That would be a good indicator that a lot of link is being moved at a loss as people try to transfer out their link and get into another more hot asset like Aptos or something like that. Not a lot of dormant coin movement. Just like most altcoins, it's staying pretty neutral right now, and the older addresses are continuing to just hold on to their link without a lot of movement. Not a lot of realized profit or loss happening right now. Supply and exchanges is staying relatively flat. Social dominance is extremely low. You can see that it actually was being talked about a lot more toward the end of 2022, and that it's really bottomed out with less than 0.25% of discussions related to Chainlink for most of the year so far. Weighted sentiment, this is indicative of not a lot of discussion. It's just staying very low because of the lack of social volume. So that could be considered a slight opportunity due to the undervaluation and lack of attention being given to it. And then as far as development activity, it does get fairly high development for an asset with about 67 or 70 GitHub submissions per day that are considered notable by Santiment. So yeah, quick snapshot on Chainlink. It doesn't look like it's doing a lot right now. There's not any major reasons that we would be excited and think that a breakout is coming, but it at least doesn't look like it's preparing for a big drop off, or might be lagging behind the rest of the altcoin pack right now. But I think that just about does it, guys. Sorry to the person requesting Cardano. We'll probably check on it next week because we get that request most weeks on our streams. But for now, let's continue to watch these markets and see if Bitcoin's whales can start to accumulate, which will be good for all of the projects out there, and altcoins will surely benefit and begin to recover more and more if Bitcoin can stay stable and potentially go above 20K, which is a big psychological resistance level right now for the markets. And we could see a lot of people popping back in if 20K is breached. So yeah, I think that'll about do it.
Yeah, if I sum up, if we see on on-chain data big holders accumulating, good. I try to keep it very simple. If we see on the social media finally people found good reason why it's growing and why it keep growing, that's bad. So as simple as that. Yeah? Mm-hmm. People buying silently, good. People talking loudly, bad. talking positively loudly. So far, we don't see much positive talks, so it's kind of good. We see a little bit early signs of accumulation, which is also good. So let's check it out where we're next week.
Agreed. Yeah,
Yep.
Well said, Maxim.
Yep.
All right. Thank you to Max and Balresh. Appreciate you all. And we will talk to you next week. Stay safe and have a great weekend.
Yeah, have a good weekend.
Bye, guys.
Bye-bye.